George of the jungle, strong as he can be.
Well, folks, we knew this ride wouldn't last forever. So what do we do now that we are in a rising interest rate environment? Thanks for coming into thecreditjungle.com. This is George Anderson. And yeah, believe it or not, even though rates are still in the threes, people were getting used to seeing rates in the twos. And so now and then people are just panicking, especially those people who are building a home and under construction, and they want to know, how long can I lock a loan? Well, that's what we're going to talk about today in thecreditjungle.com. And there's always been options to lock loans for extended periods of time. And people say, well, why can't I just have the same rate? I mean, if I'm going to close next month, why can't I get the same rate and the same terms if I'm going to close in 6 months? So you have to look at this again from the banker side of things. You need to understand that behind every lock desk and behind every calculation that you have on determining discount points on a rate, and for that matter, when we start talking about stock options and futures contracts and things like that, you have people that are what are called actuarials. These are people that are really good at statistical calculations. They've got the pocket protectors, they've got the green eye shades, and you've got to understand the premise that what you are asking to do, if you say, I want to lock my loan for 6 months because the builder told me it's going to be 6 months until the house is done, what you are in effect telling the lender or the bank is that I don't want the risk of the rates going up. You take the risk. And the bank is going to say, sure, we're able to take that risk for you. However, there's a price. Okay? Anybody who's familiar with trading options, and this is a loose correlation, but if you want an option to buy a stock at a certain price and you want to have that option for 30 days, is it more expensive or less expensive if you want to ensure your ability to purchase that stock at that price for 6 months out? And I'm just going to use 30 days and 6 months as our time frames here. Obviously, you're going to have to spend more money if you want that option for a longer period of time. So the same thing is true on a longer term lock. So every bank has a little bit different terms, but we're typically going to have an adjustment to the rate. So let's just say that your rate would be 3.25 if you were going to close in 30 days. That same interest rate to lock it for 180 days would be 3.5. In addition to that, you're going to also get a deposit. You're going to be required to put down a deposit, maybe 0.25% of an advance fee towards the loan amount. So if it's a $400,000 loan, we're going to be looking at a $1,000 deposit on there. Now, is that deposit refundable 100% at closing? Sometimes it is, sometimes it isn't. Depends on what type of loan you're doing, what are the circumstances. But despite all that negative news of having to pay a fee, pay a higher interest rate, and not get some of your deposit back, the good news is that on most longer term lock options, you also have a float down provision that says that if from the time that you lock to the time that you close, that there is enough of an improvement in that interest rate. Okay? So in other words, you locked at 3.5 when the market's at 3.25. Well, if the market got back to 3.25 by the time that you're finished up 6 months from now, you can go ahead and take that option one time to float down and take that better rate. And to mitigate the risk of interest rate fluctuation, and we have seen interest rates move up about 0.5% to almost 0.75% on some loan programs just since the first couple weeks of January. So in 60 days, we've seen fairly significant movement in there. Now, is that going to knock people out from buying a home? No, it's just going to make it a little bit more, I think it's more of a psychological effect than it is anything else. But still, people worry about it when they see things going in the direction that they haven't been going in well over a year now. So anyway, talk to your lender, talk to me if you have some needs or questions about a long-term option. My company actually has options to lock your loan for up to a year, 360 days on that. But again, there's going to be pricing adjustments and deposits, and there's going to be some other things in that, because in essence what you're doing is you're shifting that risk, saying, I don't want the risk, I want the bank to take the risk, but we're willing to do that, and the pricing on that may well be worth the peace of mind that you get and knowing that your rate can never go above a certain percentage point. So anyway, hope that's helpful for you. Thanks for coming into thecreditjungle.com. Remember, you can push button, get mortgage professional, and I'd be happy to talk with you about your questions and help you personalize a loan to your personal circumstances. Have a great day.